Well, the world's super rich just keep getting richer. A new study from Boston Consulting Group highlights more than 6,000 people entered the ultra wealthy category for the first time in 2020. That came in a year where global wealth soared, rising 8.3% to reach an all-time high of $250 trillion. Let's bring in Anna Zakrzewski, Boston Consulting Group's global leader of wealth management. Anna, it's good to talk to you. I want to talk about a breakdown in the region in terms of where you saw the biggest gains. But first, I am curious, when you look at just how much that number went up in 2020, how much of that was tied directly to the gains we saw in the stock market?
Well, you need to look at the two drivers, right? Because one of the strongest drivers were actually cash and deposits. They grew by 10.6%, marking the largest annual increase in the last 20 years. And then we had equities and investment funds, which grew by 11.5%. And that part was very much driven by strong equity markets, fueled by highly supportive central banks. So these were the two. And of course, cash and deposits. And I know that's not just a stock market performance, but with the world having been in lockdown, there was not that much alternatives and opportunities to spend.
Well, I want to ask you about a trend we've seen over the last few years, and that's the governments around the world, US and China, really cracking down on big tech, and by extension, some of their big tech billionaires. And we got rumblings of a wealth tax by Elizabeth Warren in the Senate, probably not going to happen exactly the way she wants to propose it. What kind of conversations are you having with your clients about these trends we're seeing here?
Well, the trend that we're seeing in general, and I think on the ultra high net worth space in itself, you have the ultra high net worth segment, which in itself is the fastest growing in the world. I mean, this segment has welcomed more than 6,000 people in 2020. And the total, they hold 22 trillion of investable wealth globally. So in itself, also looking at their asset allocation and that trend, I'm not sure if they are the ones that should be adding to this whole wealth tax topic in itself, as it's kind of also, when you look at where it's distributed, primarily distributed only in 10 markets of the world globally. 10 markets of the world hold 80% of all and most of the ultra high net worth individuals holding more than 100 million US dollars each. So yeah, that's how we look at that. The one thing I would like to point out specifically on the ultra, since you're now talking about the most wealthy people in the world, what we actually do see in terms of the development is that over the next years, China will actually outpace the US big time on the growth side. And China already today is generating more ultras, new wealth per year than the US over the last 2 years. And it will do the same by 2025.
Having said that, when you look at wealth managers dominating region by region, North America certainly outpacing all of that. What do you see as the big drivers there? Is it pretty much what you said at the top, which is equities on the one hand and also central bank support? What did you find on that front, region by region?
I mean, if you look at the US, and that is quite remarkable, the US has over the last 20 years more than tripled their assets to reach an all-time high of 126 trillion. And that is primarily in the US driven by the capital market. If you compare, the US holds 50% of financial wealth in equities. The global average is significantly lower. It's around 35%. And what we also see from a product mix and investment perspective, equities and investment funds will increase their lion's share of financial wealth, reaching close to 60% by 2025 in the US. So this is one of the biggest drivers. And then there is another one, which is the segment lens. And since we've been talking also about the very wealthy individuals, we see that the US market is very concentrated in the hands of the richer segments. So 70% of it is held by individuals with more than 1 million US dollars. And of course, the wealthier segments also have a bigger asset allocation and are more skewed towards equities and investment funds, especially in the US.
I want to ask you about the portfolio composition trends that you may have been seeing over the last year. I've heard rumblings, for instance, about ultra wealthy purchasing farmland to hedge against price inflation and food and other things like that. So where are you seeing the money flows for the ultra rich?
I mean, where the money is flowing and what we have seen is actually a surge and also an acceleration in real assets. And real assets is what we see as real estate, alternative investments, such as private equity and also commodity. So we do really have seen a surge of roughly 7%. And we actually expected, especially these investment trends to continue and to go back roughly to pre-COVID levels, around 5% over the next 5 years. So in the end, the asset allocation, of course, with the all-time high of capital markets on one hand side, also in parallel with the surge of cash and deposits, surged the wealthy individuals to also look for these alternative investment sources. So yes, there has been quite a large growth. And what is quite interesting, though, in the US, just to point it out, because you asked for the regional mix, we actually see that the US, compared to most of the other markets, especially on the real assets, is relatively low. So with only 28%. In other markets, you know, the real assets, talking real estate, commodities, etc., tends to be 50 to 60%.
And really quickly, Anna, what does this mean for inequity? If you're talking about a place like the US, North America as a whole, I mean, are we seeing more and more of the wealth being concentrated in a smaller pool?
We actually see more and more wealth being in more hands. Because if you look back 5 to 10 years ago, we used to have quite a high concentration more on the ultra segment, which means, you know, 100 million plus. What we see right now that there is one very, very large pool in the US, and it's actually a highly attractive one, is what we call the pool of the lower high net worths, which have, you know, 1 to 3 million US dollars, 1 to 5 million US dollars, so the surging middle class. And if you look at that, that's why we say there is more wealth in more hands. This pool is very much growing. Globally, we're talking about 330 million people in that space. And especially, this is a large opportunity in the US for wealth managers, because roughly, you know, 90 to 100 million of these individuals are in that bracket. And this is a surging middle class. So the concentration in itself is actually becoming less.
Good to get some of those numbers there. Anna Zakrzewski, Boston Consulting Group's global leader of wealth management. Good to talk to you tonight.